Okay, so good morning, everyone. Welcome to today's macro snapshot. It is Thursday, June the 6th, 2024. Let's immediately just look at some of these equity charts, guys. We know that yesterday, if we look at, let's say, the ES, which I'll first of all, let's look at the VIX. We can see the volatility. These are the moving averages here above on the orange lines. We can see that volatility is down. There doesn't seem to be a lot of sort of worry, so to speak, in the market. We can see that even, let's say 3 months volatility is down along 14, the 14 handle, and the 6 months as well is down to 16. So not only in the next sort of months on the VIX, but if you look at the VIX 3 and 6 months, volatility is very, very low. Therefore, it's a good moment to be hedging, a good moment for if you want to be putting on longs, just to be buying long gamma. It's relatively inexpensive. So all of that to say that at the moment, that's not a headwind for equities. And as we can see yesterday, if we look at, let's say, the SPX, just the cash market here, we can see that basically breaking to new highs, well above all the moving averages, of course. And then what I've got here is this overhead resistance, or potential resistance. That's my point. Where could this sort of go to? We had Nvidia, obviously making $3 trillion market cap, making headlines. But the question is, for example, if you look on a weekly, this like a weekly Bollinger Band level would be about 5,400-ish or so. And why am I saying that? Just because I think at the moment the market is looking for technical indicators. Something like a weekly Bollinger Band in the past has kind of held on the downside and on the upside. So that's the potential first target. And then if you actually look at this measured move, the shorter one here and the slightly longer one here, they kind of overlap. And you can see that the measured move, like the Fibonacci extension, is measuring out to, anywhere in these sort of boxes here. Pick your poison, 5,450, 5,500, 5,600. Similar kind of situation in the ES in the future. So you've got to say at this point, again, I just measured out a Fibonacci extension here in the S&P futures. Let's call it 54.5, 5,500. There's no reason why this can't go up more. And the similar kind of thing in NASDAQ. I won't keep on going on. NASDAQ making new highs. But what was interesting to me also was that the equal weight underperformed. It had a little bit of green, but still underperforming. And we can see that the Russell, though, did quite well. But again, giving back a little bit. So this theme that, the Nvidias of the world and some other sort of big mega caps are really sort of leading the charge here, that remains in place. And just interesting to see here that, the Russell certainly not making new all-time highs, as you can see, well under, and even this morning giving back a little bit of red. And we can see that the equal cap, the RSP, doing okay, but still not at all. The breadth of the market is still not at all wide, so narrow. Again, so that means you need to be looking at the Nvidia chart. You need to be looking at the Magnificent 506. And as soon as they show any kind of weakness, you've got to say that maybe these other ones the general index, I'd say, could fall back. Obviously, the big news today, actually, just before we get onto the ECB, let's just look at oil. Oil, interesting day, giving back a little bit this morning, but kind of having a relatively solid day yesterday. Now we had the DOE inventories yesterday, which were I would say neutral, certainly not super supportive, but not nearly as bad as the API private numbers on Tuesday afternoon. So I don't know. Oil, in a sense here, I was expecting a little bit of a reactive bounce. We're getting a bit of a reactive bounce. I'd like to see a little bit more, but the reality is that, for example, on this recent strong down impulse from the 28th of May, if we do the Fibonacci here, we can see that at this point, the bulls haven't really done particularly much. It hasn't even got up to this sort of orange line, which would represent a 38% retracement. So the jury is still out. The market is certainly not ripping higher. It's had a bit of a reactive bounce. It's grinding higher. We shall see. I mean, could this come back a bit? Yes, it could. On the other hand, could this continue to grind a little bit higher? Maybe. We'll hope so. And, some of that may be dependent on, let's say, the non-farm payrolls tomorrow, the initial jobless claims, maybe what Lagarde has to say. We'll have to see if there's a general sense of, the stocks going up and the market feeling strong, and maybe oil will boost that. One thing I can say about oil is that gasoline also had a relatively uh, I can say, slightly more than neutral kind of last 48 hours, which is a positive. The time spreads as well. If you have a look at the time spreads, I'm just going to throw on December 24, December 25. Had a couple of, relatively good days, Monday, especially yesterday, just starting to give it back a little bit today. But this was, I don't want to call it a V-shaped recovery, but not too bad. So oil at the moment, I'll keep an eye on. The other thing as well is that yesterday we had the Bank of Canada cutting. Now that was 80% priced in that cut. But in my judgment, the statement and the communication by Tiff Macklem, the governor, afterwards was relatively neutral, possibly even dovish. She certainly didn't say anything terribly hawkish that, they were absolutely critically data dependent and, the bar to another cut was high. I got the impression, maybe wrong, that they were prepared to keep on cutting, but yes, they would need to see the data coming in just gradually more and more supportive. So I would say a neutral to slightly dovish cut in my view. Again, I could be wrong here. So if we look at the Canadian dollar, I'll put it on the USD CAD. As you can see yesterday, the US dollar sort of going up a little bit, but giving it back to the Canadian dollar. So as I say, mainly priced in. But having said that, certainly nothing bearish here from the US dollar versus the Canadian dollar. If we look at the Canadian dollar against, let's say, the euro, we can see that the euro showing a little bit more strength. So some of the cross pairs showing a little bit more strength. If we look at Aussie CAD, although Aussie a little bit weak yesterday, but if we look at, let's say, New Zealand CAD, sort of continuing on a bit of an uptrend here, as you see, a little bit sort of long there. Not the world's greatest price. I'm hoping to see that this push out a little bit more, but again, it could sort of come back a little bit. But again, I think part of the stock market rally yesterday was the fact that the ISM services came in, mixed numbers, sort of, what some people call in Goldilocks, not too hot, but sort of robust sort of demand, but nothing, price pressures not particularly elevated. In fact, going down just, I think, about a percentage point, a point yesterday. So the fact that the Bank of Canada is cutting and that the economic data remains, relatively robust, I think that's just providing a little bit of a risk on, kind of positive vibes. Okay, so getting on to the ECB today, we have the ECB at 8:15. I'm recording this as I speak about 6:15, so in a couple of hours or so. Now, what's priced in? We know that a cut today is fully priced. Let's just see what the markets are pricing, just so there's no surprises here. So if we just look at this is the ECB here. You see for today's cut, D-Day, the 6th of June. Talking about Europe, we have European elections. Let's not forget what happened on the 6th of June, 1944. But anyway, basically a full cut priced in 25 basis points. Really what the market is interested to know is what Lagarde has to say for the future. As you guys can see here, if we just look going out to the future meetings by, let's say, just before Christmas on the middle of December here, we can see that in total 2.6 cuts are fully priced. So that would say another cut and a half. So another kind of 45 basis points apart from today. So all the way out to 66 basis points. And really what the market's saying, well, okay, when will the next one be? So if we get 25 today, the next full cut is priced by the market, basically by the middle of October. So really what the market wants to know is going to be any deviation from that. And if we can just see as well, the Euribor, the futures contracts, the short-term futures contracts here, what the market is pricing. If you look actually at the effective rate, it's about 3.91 at the moment. So if we go out, we can see that the market's looking at a terminal rate of about 2.5. So what's that? That's about 140 basis points. So that's about 5 to 6 cuts. So the point is not a huge amount of cuts all the way out to 2027 in terms of the terminal rate, or where the terminal rate's going to end up. So again, this whole idea that which I spoke about in a few recent videos, is that the terminal rate is, and the cutting cycle, the terminal rate will probably be higher than it has been historically for the last decade, and that this cutting cycle is going to be less deep or more shallow than in the past. So the market just wants to say, well, is Lagarde going to give us another cut in 2 months, and then a further cut in another 2 months after that? Or will she be super data dependent? So I've got a little thing here, cheat sheet, a little bit from ING, which always does nice little summaries. And I have to say, I agree with this scenario analysis here. So what they're saying is their base case, which I think most market commentators are agreeing with, is that in terms of the interest rates here, they will cut 25 basis points cut. Any further easing will only be gradual, no guidance. So no guidance in the sense that Lagarde will not sort of pre-guarantee that they will definitely cut, and she certainly won't give any sort of timetable for that. That's what their ING team is thinking is reasonable. I think that's what most of the market is thinking of reasonable. What would be particularly hawkish here? Obviously, if they didn't cut, and if maybe Lagarde said something like, we haven't cut because we're not satisfied, and a rate cut later this year is dependent on incoming inflation data. That would be extremely hawkish. We can see in that case here, we might see like a 100 tick move upwards in the euro. But again, I don't think at all that's the case. On the other hand, something a little more on the dovish side would be, yes, they cut. We all expect that. But forward guidance for at least one more cut this year. So really what we're going to be looking out for in the press conference and the statement and Lagarde's comments in general is just this idea of about will she say, yes, 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 we will cut at least once this year, but we don't know if it's going to be in the autumn or maybe more in the early winter time. What would be fractionally more on the bit more conservative on the hawkish side would be if she said, well, we'll have to see. We're fully data dependent. So it's going to be this idea of, one and done and data dependent, or maybe one and definitely not done, but we're not going to tell you. And then again, what would be further dovish would be if she said us, let's say, some kind of timetable. So that's the question there. The other thing which I think is going to be interesting is going to be the inflation outlook. Again, the current stance is that they expect inflation to decline gradually. What is expected by the market is that the latest data suggests lingering risks. So there are still some sort of sticky risks. Disinflation will happen, but it will be gradual. So yeah, we still think disinflation is happening. There are still some risks to the upside, and it's going to be very gradual. That's kind of what the market is expecting. If they come in a bit more hawkish, they would, talk about specifics like, the possibility of wage pressures, possibly going up a little bit more. On the other hand, something a bit more dovish would be to say that, showing a little bit of confidence, essentially that, don't worry, it's taking a time, but definitely we have the confidence that the target will be met over the next, sort of 12 to 18 months, that kind of thing there. So that's definitely something to be looking out for. Again, finally, is to look at the growth. What the market is expecting from Lagarde is to say that, signs that growth outlook has started to improve. It's bottoming out. And it is, I was just looking at some data a bit earlier this morning. European, sort of the Eurozone, the economy does seem to have flattened out now and does seem to be coming back a little bit. And that's what we expect Lagarde to say, that the growth outlook has started to improve. The risks are more balanced to the upside and the downside, but nothing too crazy. We're not expecting Lagarde to be too positive on the economy. That would be considered a little bit hawkish. On the other hand, there's no real need for her, because the data doesn't say it, to say that that the economy looks to be sort of weakening a little bit there. Here, what's interesting is to see where ING thinks the market could move. We're currently trading at about 1.09 in the euro, so we're not really expecting that much, just because it's priced in. The Bund at about 2.60. One thing I would say, guys, is that if we just look at the euro, just in terms of the charts, which is here, let's just look at the euro versus the US dollar for a start. Is that at quite interesting levels here. You can see, the euro has had a nice upturn, trading above all the moving averages here, but it is running into a pretty significant overhead sort of resistance point at 109.10, let's call it, around about here. 2 or 3 days ago on the Monday, it was kind of went down. Now, could the euro, on the cut, which as we know is completely priced in, and a sort of neutral Lagarde, could it sort of pop up here a little bit? Yes, but I think it's going to be, what would it take to get the euro north of that, up to the 109.40, 50, and maybe testing up to 109, even like up to the 110 level? I think, it would have to go to one of those hawkish scenarios that Lagarde said that, definitely they've cut today, but absolutely not guaranteeing further cuts. The growth was, starting to trend up nicely. That inflation remained fairly sticky. I think we'd have to see something like that from Lagarde to really push this higher. On the other hand, you have to say, well, why would it fall? Again, I don't see that, because that would have to be something other than neutral on the dovish side. So I think we could get a bit of choppy price action here. and maybe not too much at all. And maybe the euro's next course will be driven much more by the US data, non-farm payrolls tomorrow. Then, of course, we've got, a lot of stuff happening next week. So that's that. One thing I would draw your attention to, guys, is just something happening in the US yields. I noticed that on the yield chart. So this is the yields on the daily. So you can see that in terms of the moving averages, the yields have come down a lot over the last 5 or 6 days, normally about 25 basis points. So a full cut has been priced back into the US curve. We're now looking at 2 full cuts priced by the end of the year. But look at some of these moving averages. Not so much at the front end, although that's got a very nice resistance here at about 4.72. But if you start looking at the 5-year, you can see that we're at the 200-day moving average here. If you look at the 10-year, the 200-day moving average, and also the 30-day, just around about the 200 moving average, and the and some horizontal resistance. My point is that a lot of the yield charts in the US, they're getting to quite strong resistance, and they have moved quite a lot, like 25, 30 basis points. And so the point is this is a moment for the US yields just to back up a little bit. And if we get sort of a, sort of something relatively neutral from the Gulf, could we start to see a bit of US dollar strength coming back in against the euro? The other thing as well, which I think is quite interesting, is just the bond space. If we look at the differentials here, if I look at something like the US versus the German, again, that's come in a lot in favor of Germany. So those yields have narrowed the differences, and we're getting to some quite I would say critical, but some important sort of resistance levels. This is the 2. We're getting down towards the 1.7. If we look at the 5-year minus 5-year, you can see that that's come in a lot over the last 2 or 3 weeks. I mean, that's come in. Just throw on if I can find something to measure that with. Going back until, let's say 5 weeks ago, that's come in about 25 basis points in the differential. So that means that, the European yields have not dropped nearly as much as the US yields. So the point is here, I think there's been a possibility for a rebound. If you look at the 10s, again, getting down to a very interesting level at just over 1.72. Was at about 1.75, but I think that was a kind of a slightly more critical level. Point being that a lot of these differentials, look at the 30 as well, have come in a lot, and that it's possible here that we might see the US yields going a bit higher, or at least not falling as much compared to the European one. So that's something I'll be looking at here. And just finally, if you want to look at that, we can look at the, let's say, for example, the German 2-year yield. It's come down quite a lot as well. And unless Lagarde is very, very dovish today, you say that, could that potentially even go up a little bit? So definitely be looking at the European bond yields as well. Just the other thing on Europe is just to see the Euro stocks, which I'll bring up here. I mean, we can look at the DAX. We can see that the DAX, which is the German index, not quite as strong as the US. You could argue this is, I don't know if this is a topping formation. Is this like a shoulder and a head? Maybe, sort of a head and shoulders, which is slowly being formed. Is this some kind of bullish flagging formation, which could pop out higher? Interesting one, but not quite as strong as the US markets. We also look at the Euro stocks here, a similar kind of situation to the DAX. Again, is this the, sort of the head being formed in a left shoulder and a head and possibly a right head and shoulder? Or on the other hand, is this just, a nice sort of Fibonacci buy on dip, 61.8, trying to break to new highs like the American cousins? We shall see. If Lagarde is, relatively dovish today, for sure, it could be that the European stocks, maybe the FEX here, the Euro Stoxx 50 pushes to new highs. Interesting. Don't forget as well today, guys, we do have the initial jobless claims, which is kind of sandwiched between the interest rate decision at 8:15 and Lagarde's press conference at 8:45 Eastern. So the initial jobless claims, let's see if that is weakening, is strengthening. We know that JOLTS number on Tuesday was a little bit lower than expected. We know that ADP yesterday was a little bit lower than expected by about 20,000 jobs. So is the US labor situation slowly weakening? The initial jobless claims at 8:30 will give us a timely update on that. Okay, I'll leave it there because I don't want to talk too much about other stuff. The only thing I would say, those of you who look at this, overnight we get the import and export numbers from China. Just interesting because there's been quite a lot of talk that recently that the Chinese economy is stabilizing a little bit. So if we do get, sort of strong export numbers, that could be a bit of a positive for risk sentiment overnight before we go into the non-farm payroll numbers tomorrow. Okay, guys, I'll leave it there because I want to get on and look at this European stuff. Have a great day, and we'll keep on talking. Thank you so much.